Hey folks, Dan Frio here with your market update. Well, I guess yesterday you didn't want to hear about refinancing. I put a video out yesterday morning. I think I got about 500 hits. It was the refinancing, how, where, when, and why, or something like that. So maybe you're not interested in that. So let's get back to what we normally do, and that is the market update with Dan Frio. So let's get to it. Over here, these are the top 6 products people use or have when they buy their first house. Okay, these aren't not my rates. These aren't Bank of America rates. They're not Citibank rates. Whose rates are they? Well, Mortgage News Daily surveyed lenders all over the country and asked them these 5 questions. 5 questions. Is this going to be your first house? Is it your primary home? And is it a single family home? The other 2, you want to know what those are? Oh, let's get to it. The other 2 are right through here. You're putting down 25% and you have a 780 credit score. If that's you, fantastic. Then that most likely is really close to where your rate's going to be. Rate's going to go down a little bit. If that's not you, I'll give you all my information at the end of this video because I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you get a mortgage and try to figure out, can you buy a house or not? But before you go there, I want to still show you the state of the economy right now in employment and the housing market. So let's get to it. The headlines on Yahoo Finance is right through here. U.S. economy growing for last quarter slightly at 1.4%. So we're going to dive in all these, but let's see through here. U.S. weekly jobless claims fall, but the total number collecting benefits hit the most since 2021. What else do we see right through here? U.S. weekly jobless claims shift lower. So what it's telling us is the jobs numbers must have come in and they're not very good. Okay, so let's get over to it. Let's get to the economic calendar. So what we have so far today is this. We have durable goods orders. All right, it was previously 0.2, now 0.1, half. Okay, half durable goods orders. You have GDP. How much production is our economy doing right now? Well, the last reading was 3.4. That's a pretty good number. Now it's 1.4, less than half. So we have the half here, and we have initial jobless claims basically steady. Okay, they're flat right there. But again, you saw in the last caption, more people are staying unemployed, and that's not a good thing for the market. Let's go through here. First quarter GDP grew a soft 1.4%. What's going on there? Well, the increase in the domestic products, the official scorecard for the economy was the smallest in the last 2 years. So that means the economy is shrinking. So when the economy shrinks, you don't need as many jobs, you don't need as much stuff. So let's get it over to my calendar. So this is my calendar. We'll get this out of the way. There it is. Okay, so why do I use this? Well, it gives me a lot more data and it gives me this. Okay, the system's called MBS Live. If you're a mortgage advisor, highly suggest you get this thing. I'll have the link down below. But let's dissect the economy right through here. You guys give it a grade. Tell me if you would give it an A, B, C, or D. Okay. So let's start talking about the jobs numbers. Okay, we have jobless claims. They came in, they're basically right in line. Continued claims, staying steady. And that's the concern right there. People are having a tougher time getting jobs. Durable goods orders, last reading was 0.7. Now it's 0.1. That's terrible. But it was revised to 0.2. So that's why the number is different from the last thing. Core cap went from 0.3 to negative 0.6. It fell off the cliff, go down through here. Corporate profits up 4, now negative 2.7. Went through the GDP. And then where's inventory? Inventory right now. Previously reading was 0.2. There's 0.2% of products in inventory. Now what it is, 0.6, triple. Okay, that means more stuff is being held at the stores because they can't sell it. Okay, so this is, first thing you'll think is, okay, if you grade this thing on the health of the economy, you probably give it a C or D. Okay, so, but that is good news when it comes to rates. Why? Look at this huge jump right through here. Okay, so what you're watching right through here, this is a mortgage bond that trades on Wall Street. You might hold it in your 401k or some investments if you have a bond fund. What this thing tells you is right through here. So I'm predicting that mortgage rates are going to be back at about 6.9. How do I know? I'll go back to here. MBS market is up 14 ticks. So what does that mean? Well, this is the price of a mortgage bond, okay? And this right through here, what you need to understand is just this. It's really simple. If the price of the bond goes down, rates are going up. If the price of the bond is going up, rates are coming down. This is a pretty big move. Right now we're sitting at plus 15. So we'll probably be 6.99 here by the end of the day. So that's that piece of the puzzle that we have right through there. Okay, so let's get over to weekly jobless claims. But the total number, here's the concerning part. The total number collecting benefits is the most since 2021. Okay, what happened in 2021? Well, that was kind of during COVID. And you go down through here. Americans collecting benefits rose to the highest level in the last 2 years. However, the total number of Americans collecting unemployment benefits rose for the 8th straight week to 1.84 million for the week of June. Okay, so that paints you a picture of the market. So here's also right through here. Here's the other piece of this puzzle, which I guess is going to help matters. 2023 new single-family home starts. Now, why are we going over 2023? Because it was just issued today. So let's get through this. Nationally, there's 946,000 homes, new single-family homes constructed in 2023, 7% fewer than the number of units started in 2022. This marks the lowest annual count since the pandemic. So let's paint this picture. And thank goodness there's not a lot of home starts, because house prices would then plummet. This is where a lot of people kind of don't get it. If you just look at economics, just pure economics, you have supply demand. Okay. The demand during COVID was crazy. The demand now isn't crazy at all. It's actually really low. But the good thing behind this is right through here. If we had tons and tons and tons of properties coming to the market, existing home foreclosures, new construction, prices would plummet. The reason why prices aren't plummeting is right through here. Builders aren't confident in the economy. They're not confident in what the Fed's going to do. They're not confident in our government. They're not confident with things, so they're not putting all their efforts into this, okay? So that's the concerning part. So that's why there's going to be an equilibrium with prices. I'm going out there again saying this year, and I started at the beginning of this year, I said this year is going to be completely flat. Yeah, you're going to have some markets down like Austin and things like that, but you're going to have some markets like we have in the Midwest, Detroit, Chicago, we're doing well, and so forth. You're going to have other areas up. So as in general, it's just going to be completely flat. That might help you guys out, because you're sitting there, you might be renting and you're waiting for prices to do something, and they're staying steady. You know, some areas are going up a little bit, some areas are going down a little bit. Yes, that's part of it. But some areas are just basically staying steady. I do have something that I posted a video yesterday. Check it out. It's right through here. I think I captioned it wrong, or maybe I put a wrong thumbnail. My goal is I want to come out once a week and pick an area to maybe consider buying a home in. Now, this is just going to be hypothetical, but I want to show you how you can review the numbers. Look at, what areas are seeing some growth, what areas, are seeing price decreases, what areas have houses on the market that you could afford. We're going to do a rent versus buy analysis and so forth. So check out that video I posted last night. I think you're going to find it more intriguing than the thumbnail and the title reads, but I think you'll learn a lot. So that is my report for today. So rates are probably going to go down about 6.9 or 6.95, 99 to 6.95 later this afternoon. I'll do a report at the closing bell. But if you're out there and you're like, hey, Dan, I need help. I'd like to refinance my house and maybe get a lower payment or pay off some bills. Okay. Or Dan, how do I qualify for a home? This is my first time. I'm trying to kick the tires. I don't know if I qualify. I don't know if my credit score is good enough or what. Don't disqualify yourself. Okay. So if you're looking to buy your first house, the first thing I need you to do is click right there. See if you're eligible for a grant. Okay, we have grants up to $7,500 that'll give you, and you don't have to pay it back. For those in Illinois, we're coming out within the next 30 days. We're coming out with a $10,000 grant program. I'll come up with those details here shortly. Kyle will be doing a video on it as well. So if you're in Illinois, expect in the next 30 to 60 days, we'll have a $10,000 grant available to you, and we'll be coming out with details on that here soon. So if you're interested in doing anything, go to therateupdate.com, check the grant finder. But if you want to kick the tires to see if you qualify for a home, click the Apply Now button. It's going to send you out, and you'll be taken care of with me, by me or one of my staff members. We'd love to help you. So thanks for watching, guys. Please don't forget to do me one thing. Subscribe down right over there if you would, and I'll be back for the closing bell to let you know how the market's panned out for the day. Thanks for watching. God bless, and have a fantastic afternoon, folks. See you soon.